Welcome, and in today's video, we are going to take on the challenge to invest $100. We will show 10 ways to invest $100, the expected returns, how risky it is, and how all 10 ways compare against each other. So, after this video, you will have a pretty good idea where is the best place to invest your next $100 to get the maximum return for the lowest risk. You might be thinking you don't have enough money to get started investing. But you can get started with as little as $100. As Jim Rohn says, it's not the amount, but the plan that counts. A $100 is pretty easy to come up with to start something as important as investing. So today, let's look at how to invest $100 10 different ways to get you started investing. But before we begin, make sure to like this video and subscribe and turn notifications on to be notified whenever a new video comes out. Let us now discuss 10 ways how you can invest $100. Number 1. Individual stocks. Starting our list is investing in individual stocks. It's the most common one people think about when investing. However, stock picking is risky, it takes a lot of effort to manage, and it's easy to get wrong. So, if you are planning to invest in individual stocks, then use 10 to 20% of the capital to pick individual stocks. The chosen stocks should be of stable and profitable companies that pay a dividend. There are many ways to trade stocks, but for our challenge, we would be holding them for over a year to give us an annual return. Based on previous results, it's common to see an annual return of individual stocks of 30% annually. However, they're considered a high-risk investment compared to our other opportunities for our $100. Number 2. Government bonds. The next investment option for our $100 is government bonds. A bond is a fixed income instrument that is backed by the government. Now, bonds have their place to help diversify an investment portfolio as they have an inverse correlation to the stock market indexes. However, the reason why many don't fully invest into bonds at an early stage is because of the difference in returns between indexes and bonds is so large. Even with downward corrections in the stock market, bonds are still not a good enough option to invest a majority percentage of in a portfolio. Depending on the risk tolerance and a few other factors, having around 5 to 30% in bonds seems to keep a nicely diversified portfolio. Hence, start early by diversifying your portfolio of $100 to minimize the risk. Generally, the annual rate of return of government bonds are around 2.5% with a very low risk factor, pretty much on the opposite end of individual stocks. Number 3. Index funds and ETFs. The next way to invest our $100 is in index funds and ETFs. An index fund is a portfolio of stocks that tracks a particular market index or specific sector. There are ETFs for practically any niche of the stock market you can think of. But for our challenge, we will stick with the SPY ETF S&P 500 Market Index, which is usually the starting point for all smart investing strategies. For beginners, it's wise to put at least 50 to 75% of the portfolio into an index fund to get started. This ensures a healthy return without a high-risk profile. For our challenge, we would rank index funds with a medium risk factor as they are still a collection of individual stocks that are meant to replicate the market, and on average have one negative returns year once every 5 years. However, with that risk level, they offer a generous 13% rate of return on an annual basis. In order to learn more about index funds, watch our video on the S&P 500. Number 4. Cryptocurrency. The next investment option of our $100 is very new and popular at the moment, and that is cryptocurrency. Cryptocurrency is a digital currency that works similar to the idea of stocks when talking for investing. In cryptocurrency, there are many different kinds of currencies in which you can invest in, the most popular one being Bitcoin. To learn more about cryptocurrency, make sure to watch our video explaining what it is or by checking out the Top 5 Cryptocurrencies video. Links will be down below in the description. As you would expect, investing in cryptocurrency has the highest risk factor, but also brings the highest returns, with returns upwards of greater than 50% annually. This high-risk, high-reward investment is a hit-or-miss situation, hence why it's wise to only invest upwards of 5 to 10% of the portfolio into cryptocurrency. For our challenge, it sits lower down on our best choices to invest $100. And we have to mention the risk that it is open to hackers, and by selecting the wrong crypto to invest in, you might lose all your money. Starting off with watching our top 5 cryptocurrencies will help give you a better idea of how to start investing into that asset class. Number 5. 401k account. The next investment option for our $100 is a 401k account. A 401k is a company-sponsored retirement account that employees may contribute to on a tax-deferred basis. This is money that is put in pre-tax, allowing the tax to be deferred for decades. And once at retirement age, when income is less, the tax paid will be less. So there is a double tax benefit to this account. It's also a great account as employees receive a match percentage from their employers. Typical match percentages are 3 to 6%. So with investing our $100, we get an immediate 6% return. Now, most 401ks are managed by institutions, therefore they have fees associated with them, usually around 2%. So with a decent rate of return of 7% per year, our 6% match on our funds, and the 2% fees, a 401k can fetch a total annualized return of 11%. And because these accounts are investing very similarly to ETFs, they carry a medium risk factor. With a medium risk scale, a 401k won't bring you bragging rights high returns, but it is still something useful as it comes with free money from your employer. Comparing it to our other options, it sits fairly high as an investment option. Number 6. High Yield Savings Account. The next investment option of our $100 in our $100 challenge is a high yield savings account. This type of account is a savings account that earns a higher interest rate than a traditional savings account. This is the lowest risk option, but also is the lowest rate of return of around 2 to 3%. And currently, inflation is very high, so when taking this into account, the rate of return would be almost nothing, or even the value of money in a savings account is eroding. Imagine putting in our $100 and after a year, we go to buy something that was $100 when we first saved our money. But then, that same item cost $104. Basically, inflation eroded the value of the money. However, for our challenge, we didn't include adjusting for inflation in any of our options, but it is something to keep in mind. And if you want to know more, we have a video that explains when inflation gets really out of control called hyperinflation. Compared to the other options, it sits at the very bottom of choices, just slightly better than bonds and not a good choice for investing at all. Of course, this isn't financial advice, but financial education for you to learn from. I want to see you benefit from this, but please use it at your own risk. Number 7. Gold. The next way we can invest our $100 is a classic, and this is in gold. Gold has been around forever, and there are many ways to invest in gold. The most common one is the GLD ETF, which tracks the price of gold. It's an investment that has a great theoretical backing that there is only so much gold in the world, and thus the supply and demand would indicate the price will go up. But how long are we talking here? Well, gold brings an annual return of 10% and carries a low risk factor. To diversify a portfolio, a portion should be invested in gold as it is a non-correlatable asset class to options such as stocks and bonds, making it a good way to diversify. Comparing it to our other options in our challenge, it sits in the upper choices and should be considered to put a portion, say 5 to 15% into gold will improve diversification. Number 8. Flipping items. The next investment option of our $100 is into flipping items. The concept of flipping items is to buy an item at a price and then sell it for a higher price, turning a profit. There is some incredible stuff that you can buy at places like flea markets and garage sales and flip on websites such as eBay and Craigslist. Flipping can bring in massive returns if the product is trending or is being practically given away for free. In these cases, it is easy to double your money. However, it comes with a lot of risk as these are unique situations and in most cases rare. Comparing it to our other options, it sits towards the lower part of our list. Number 9. REITs. Another investment option of our $100 is in REITs. Real estate investment trusts, or REITs for short, are an investment fund that manages income being produced by real estate. Purchasing a REIT is a great way to have exposure to the real estate market without owning any real estate. The way to do this is by buying a REIT ETF. Usually, REITs provide an annual rate of return of 8% and come with a medium risk factor. As real estate is a sector in the stock market, the risk increases of having a poor return being a single sector. However, REITs seem to remain generally stable while still offering decent rates of return. And REITs are a great way to diversify as they are another non-correlatable asset class to stocks. For our challenge, comparing them to our other options, REITs sit in the upper tier as better choices for investing our $100. Number 10. Financial literacy books. The final investment option of our $100 is in financial literacy books. Why books? Well, because without knowing the rules, how can you play the game? Improving your financial literacy is the foundation for all investments. Knowing the principles, strategies, and finally the tactics helps with the decision-making, whether it's short or long-term planning. We would consider books to be a priceless rate of return and a very low risk factor, placing it at the top spot of our investment choices. And to get you started, our top 3 picks for financial literacy are I Will Teach You to Be Rich by Ramit Sethi, The Intelligent Investor by Benjamin Graham, and Rich Dad, Poor Dad by Robert Kiyosaki. There are links in the description below if you want to get started studying these books or many others that will provide further explanation of strategies mentioned in this video. We highly suggest you grab a copy. A $15 investment into a book can save thousands in a single year. Well, if you enjoyed this video, give it a like. And be sure to subscribe and turn notifications on to be notified when a new video comes out so you can receive all the latest financial tips. And if you know someone who would benefit from this video, please share it with them. Well, we've completed the challenge. That was a lot. We've gone through 10 ways to invest $100. To recap our 10 ways, we're going to rank them in the best investment choice to the worst based on their rate of return and risk profile. At the top of our list is financial literacy books. Number 2 is index funds and ETFs. Number 3, investing in a 401k. Number 4, diversifying with REITs. Number 5, investing in individual stocks. Number 6, investing into cryptocurrencies. Number 7, flipping items for massive returns. Number 8, buying gold to diversify. Number 9, a high interest rate savings account, but watch out for inflation. And at the bottom of the list, number 10, government bonds, the classic way to hedge against stocks. That's it for today's video. If you liked these 10 ways to invest $100, you'll enjoy this video on investing with no money. That's right, we share 6 ways to invest starting with no money. All the best, and I will see you in the next video.